This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. crude oil stockpiles fell more than expected last week, while gasoline and distillate inventories rose as refining activity picked up and demand dropped. The Energy Information Administration, EIA, said on Wednesday. Crude inventories fell by 3.7 million barrels to 429.3 million barrels in the week ended August 2nd. The EIA said, compared with analysts' expectations in a Reuters poll for a 700,000-barrel draw. Crude stocks at the Cushing, Oklahoma, delivery hub rose by 579,000 barrels, the EIA said.
A group of Western insurers have provided cover for tankers carrying Russian crude, keeping its oil flowing after many in the trade sector withdrew for fear of breaching the rules of AG7 price cap, data from traders and shippers shows. The data seen by Reuters showed that 5 insurers, including American Club, Luxembourg-headquartered west of England and Norway's Guard, provided cover for 10 tankers that sailed from Russia to Asia this year. American Club and West of England provided insurance for 2 vessels, the Gioiosa and the Orion I, that made similar voyages in early 2024.
Moving on to the top news in the energy sector.
India's fuel consumption rose by more than 7% year-on-year to 19.653 million metric tons in July, oil ministry data showed on Thursday, driven by increased air travel and overall economic growth. There has been a significant increase in jet fuel consumption, along with similar trends in petrol and diesel, said Prashant Vasisht, Vice President and Co-Head, Corporate Ratings at the India Credit Rating Agency, adding that the annual rise can be attributed to overall economic growth and the surge in air travel. On a month-on-month basis, the trend is not very significant, likely due to the impact of the monsoon, when industrial demand typically declines, Vasisht added.
Oil prices fell in choppy trade on Thursday, and looked set to snap a 2-session streak during which they gained about 3% due to growing supply risks amid simmering tensions in the Middle East. Brent crude futures fell 25 cents, or 0.3%, at $78.08 a barrel by 0650 GMT, while U.S. West Texas Intermediate crude lost 13 cents, or 0.3%, to $75.10. Both the benchmarks had recovered from near 2024 lows in early trade on Thursday, before turning negative. The potential for Middle East supply disruptions have caused volatility, with the killing of senior members of militant groups Hamas and Hezbollah last week raising the possibility of retaliatory strikes by Iran against Israel. Next, we have the top news in metal markets. Gold prices gained on Thursday, snapping 5 sessions of losses, as Middle East tensions and optimism surrounding U.S. rate outlook supported safe haven bullion, while traders awaited more clues on the Federal Reserve's policy trajectory. Spot gold was up 0.8% at $2,399.50 per ounce, as of 0704 GMT. U.S. gold futures were up 0.2% at $2,437.80. Longer-term fundamentals look supportive for gold, which include geopolitical tensions in the Middle East and the downward trajectory of the U.S. Treasury yields, said Kelvin Wong, OANDA's senior market analyst for Asia-Pacific.
Iron ore futures prices extended losses into a third straight session on Thursday, with the Singapore benchmark falling below the key psychological level of $100 a metric ton, weighed down by resumed talks of steel output curbs in top consumer China. The benchmark September iron ore on the Singapore exchange slid 1.18% to $99.75 a ton, as of 0243 GMT, its lowest since July 31st. The most traded January iron ore contract on China's Dalian commodity exchange slipped 2.38% to 739 yuan, $102.99 a ton, touching the lowest level since April 1st. Market talk that China's top steelmaking hub Tangshan will impose stringent restrictions on steel output soured sentiment, pressuring ore prices, said analysts.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures rose on Thursday after a three-day losing streak, buoyed by stronger rival Dalian contracts and firmer crude oil prices. The benchmark palm oil contract for October delivery on the Bursa Malaysia Derivatives Exchange gained 23 ringgit, or 0.62%, to 3,720 ringgit, $834.08, a metric ton by the midday break. With a calm dollar-ringgit volatility this week, gains in crude oil due to the renewed Middle East crisis, and Indonesia discussing increasing the biodiesel mandates, palm oil may find support around the 3,650 ringgit range, said Sandeep Singh, director of the Farm Trade, a Kuala Lumpur-based consulting and trading firm.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.